What up? What up? What up? Once again, this is yours truly, MJ Worthmore, LegalConArtist.com, and I want to say thank you for watching this video. 9 times out of 10, you are watching this video because you bought a copy of my ebook or you got a physical copy of the book. Either way, I appreciate your purchase. Thank you so much. And you are now watching this video because you want to know, see, understand, know, see, and understand the market maker pattern, the phases of the market. What I'm going to show you here, guys, and this is going to be a little bit of a longer video because I'm going to be very detailed. I'm going to go over some things that really will help you not only see the pattern, but to also understand the psychology behind the pattern and why it works so effectively on uneducated and ignorant traders, which you will no longer be after seeing this video. So grab your notepad, grab a blue pen, because the brain does register information written in blue ink, better than black ink. There goes a free one. Grab a notepad and a blue pen, and I want you to watch this very, very carefully. We want to talk about, once again, the market maker pattern, and you'll see it as the phases of the market. And again, you'll understand the psychology behind it, the names, everything. It's going to be really, really deep, really, really detailed, but I promise you it will make you money, okay? So let's dive right in. I'm actually going to go to a chart that I already kind of marked up, and I'll show you bit by bit. But before we do that, let me go ahead and share my screen with you. Okay, so first things first, I actually wrote this out for you, right? I want you to be able to get this information at a high level. So check this out. We want to talk about the market maker pattern. And there are 4 phases of this pattern, 4 phases. And I also want you to see their objectives. Okay, so let's start with the very beginning. The first phase, phase 1, is the accumulation phase, right? It's also known as the consolidation or the ranging market. And as you can tell, the key characteristics, as you will be able to tell, the key characteristics of the accumulation phase, accumulation stage, whatever you want to say, is that price is bouncing back and forth between 2 key price areas, right? So you got to remember, price operates in areas and zones. It's not so restricted that it gets to one specific number and then moves in the opposite direction. It's an area, it's a key area, right? But what it'll do is it will establish a visible area of support and resistance, as well as what's called an average price line. Basically, that average price point between the support or the resistance and the support, okay? That is the accumulation phase. Here's the objective of it from the market maker standpoint. The market makers want to get traders trading, right? Because market makers need traders to place orders, such as market execution orders at certain places, buy limits, sell limits, buy stops, sell stops. And the reason is because when there are orders in the market, then that also means that there are stop losses in the market. That's considered money on the charts to the market makers, okay? So I want to show you how traders actually will see these areas and get lazy, and the market makers use that to their advantage, okay? So let's go to one of my favorite pairs to trade, which is GU. I want to show you the accumulation phase, okay? So check this out. Make this nice and big. So as we see here, GU is bouncing back and forth, right? Pair on, basically ceiling and floor, right? We might be able to make this a little bit tighter, okay? All in all, this is that general key area that price is bouncing back and forth, okay? And here's the average price line. So what I typically do is I try to get my my accumulation to have like a line of best fit, right? So even if I want to make it even tighter, this might be it right here. You've got a little reach out, little false breakout here, little false breakout here, turns right back around and go down. It's really easy to see, really clean to see on the 30-minute and the 1 hour. This is the 15-minute, because I typically use the 15-minute to make my entries, right? But let's say we're looking at it on a 1 hour. Here it is right there. Okay, so price looks really, really choppy. It's just kind of back and forth between the same areas over and over and over again. All right. Now, to get an average price line, what you essentially would do is you would highlight your box, right? And let's just say that the top price is 1.386, bottom price, I want to round this up to 1.3795. Only reason I'm doing that is because I know that banks like to trade in nice clean numbers between 0-5 numbers. So let's just say that this is our resistance and this is our support, right? Resistance area, support area. What you essentially would do is you would take those 2 price points, add them together, cut it in half, and that'll give you an average price line, okay? So here's the reason why the market makers do this, okay? So think about it for a second. When you have these areas, this area of support and resistance, here's what traders do. Some traders will say, hey, this is an area of resistance. So I want to, whenever I see price reach this point here, I want to sell it down. So they'll set a sell limit order. Let me make this box not as dark, so that way it can really pop out. Okay, really got to be able to pay attention to it. Okay, and I'll make this a little bit brighter. Here we go. Okay, so now a lot of traders will see that as a resistance area, like, okay, cool. So I want to set a sell limit order right here, and I'll have my stop loss like right here. Okay, so we've got sell limit traders right here in their stop loss. So I'm gonna go ahead and put that on. So we've got sell limit trader, and above are their stop losses. I'm gonna do it like this. Okay, so that's the kind of traders that we have at the ceiling. But we also have traders down here that are buy limit traders, right? They're like, hey, I want to buy off of support. I want to see price hit the floor and then bounce up. So there are traders that set those buy limit orders here. I want to really make this better. Look at that. That's funny. Okay. Let's do this. All right. Let's say that that's our line of best fit right there. Okay. So now we've got these buy limit traders who are like, hey, when price hits the floor, I want it to bounce up and give me money. So now here's what we have here. And again, the reason why this is happening is because the market makers want people like this to say, hey, get in, get confident, get lazy, right? Don't worry about it. We're going to pay you. Okay. So now we've got our buy limit traders and their stop losses here in the general area. Now we also have two other kinds of traders, okay? These are our breakout traders, the traders that want to see resistance get broken, retest, and fly, right? So we got the break and retest traders who think price is going to go long, right? We got those traders up here as well. So we've got these breakout traders. They've got these buy stops, right? Because they think that price is going to hit the ceiling and fly through it, especially if it just keeps bouncing against it a couple times. And their stop losses are right here, okay? So now here we have it. We have our buy stop traders and their stop loss. You're starting to see now how this setup is coming in, right? You're starting to see how this is making a market. This is making a trading environment by limit traders. Okay, this is making a trading environment for people like you and I. Okay, so we got our buy stop traders with their stop losses here, and then last but not least, we have our sell stop traders. Traders that think, oh man, price is going to hit the floor and then shoot through it, right? So they're these guys. They think price going to hit the floor and melt down after maybe a break and retest. Okay, and their stop losses are here. So now we've got this set of traders. Okay, these are our sell stop traders. Okay. Now, the reason why the market makers do this is because they want to create this trading environment for you. Because all this red here, these are areas, this is money on the chart for the market makers to take from people like you and I, right? They want to feel confident, overly confident. They want us over leveraging because we're seeing consistency between this ceiling and this floor, right? So that's the environment that they want to create for us. But the reason they do that is so they can now go into what's called phase two. Phase two of the market maker pattern is expansion. It's also called the false move or the fake out breakout, like I like to call it. And some of its key characteristics are it's usually a sharp, aggressive momentum move in one direction, getting traders to experience fear of missing out, FOMO, and making an impulsive decision. This is where traders who might not have had a stop order set, they see price breaking out and they're like, oh my God, it's going to the moon or it's going to the floor. And they slap market execution. They jump in really quickly, right? And truth be told, you might make some money like that. You might see your trade go blue, but unless you know what the next phase is, which we'll talk about here in a second, unless you know what that next phase is, you are setting yourself up to get hurt, okay? Here's the objectives, the main objectives of the phase two expansion phase. Objective number one is to get traders taking trades on the wrong side of the trade. Market makers need traders to buy at high prices in order to force traders to sell off at low prices and lose money, right? They also need traders to sell off at low prices in order to force traders to buy back at higher prices and lose money that way as well, okay? So that's the first objective, to get you taking a trade on the wrong side That's the main objective. And that's because they need you buying when they want to sell, and they need you selling when they want to buy. Okay. Objective number 2 is they want to activate any pending limit orders at the established support or resistance area and immediately knock them out by hitting those stop losses quickly, right? So those orders where you expect the price to bounce off the ceiling or bounce off the floor, those stop losses are usually pretty tight. They want to hit that money quickly, right? Now, objective number 3 is they want to activate any pending stop orders for the breakout traders and show them temporary profits to give them a false sense of security. Because when you've got a false sense of security, what you typically do is you take too many positions and you don't trail your stop loss, right? So now you end up over leveraging because greed gets in because you start to see that blue on your MetaTrader 4. Come on now, you know you've done it, right? So now we want to see the expansion move. You'll either see expansion to the high, breaking the high of the consolidation, aka the accumulation, right? You'll see expansion of the high, or you'll see an expansion of the low. So let's play this out a little bit, okay? So once again, we've got our accumulation phase here. We've got all of our order set. Let's look at what happened. Boom, sharp move. You see that? Rocket. Oh my God, market execution buy, right? So this is a very sharp, impulsive move, right? Where they want you to take trades going up, right? They see this breakout, this retest right here, another little retest, maybe a third little retest in this general area. They want the breakout traders. They want these guys, the buy stop traders, to see a little bit of profit, right? Now think about it. The stop loss traders, I mean the sell limit traders and their stop losses, they already got beat, right? You see that? Stop losses already got beat. So now that money is off the charts. Those traders, they got cooked. Okay. So objective number 1 is complete. Okay. Now let's say it keeps rising up. So now we have an expansion to the high. Yeah, here. Expansion to the high. Okay. So now this is done because again, market makers want you on this side of the transaction because they plan on doing the opposite, right? Now think about this for a second. If they want traders buying at a high price, how else will they make money? They will only make money if you sell back what you bought high at a low. So they're always setting you up so they can take money from you. Now, my buy stop traders here, the break and retest traders, unless they're trailing their stop losses and they're not being greedy, not taking additional positions, right here or right here, right? If they're not being greedy, if they're trailing their stop losses, they're good. They'll make some money, right? But most traders, they see this and they don't trail their stop losses, and they ultimately end up getting hurt because they want to see that blue number get bigger and bigger and bigger. And what ends up happening is phase 3 comes into picture. Okay, phase 3 is called distribution. This is the profit taking phase, right? This is where the market makers do the reverse they had you doing, right? Hence it's called the first reverse, the true move. This is your trend phase, right? And we'll go into the major pattern, W, VVM, M, AAW. I'll show you what that looks like, okay? But all in all, this is what that is. The true move, trend phase, first reverse, because it's reversing what they did during the expansion phase. Here are the key characteristics. This is usually a slow, methodical, and pacing market, which consistently creates higher highs and higher lows in an uptrending market, or if it's creating lower highs and lower lows in a downtrending market, right? 3 major objectives. Major objective number 1 is to take profits on the retail herd. Most retail traders all think the same way. It's called the herd mentality. So they want to take profits on the retail herd that enter trades on the wrong side of the transaction by exiting trades on the correct side of the transaction. That's how they make their money, right? So that means if you sold low, they're forcing you to buy back high so they can make a profit. Or if you bought high, they're forcing you to sell off low so they can make a profit, okay? They do this by eventually knocking out all the breakout traders by hitting their stop losses slowly, okay? It's a reason why they do this slowly. It's because most breakout traders who didn't trail their stop losses when they're in profit, they will now begin lifting their stop, right? Because they think it's going to turn around and go back in their direction, okay? Like we see here, this usually gets uneducated retail traders to consistently lift their stop losses in hopes that the market will turn back around. Come on now, I know you've done it. I've done it too, right? this causes them to bleed out their accounts and eventually blow their account. And as you saw earlier in the chapter before, the market makers are incentivized. They literally get paid bonuses to blow accounts like yours and mine, okay? That's what they get paid to do. So trust me, they're going to do it efficiently, all right? Now, objective number 2 is to activate, right, eventually, to activate the pending limit orders at the established support or resistance, right? So as we saw in GU, we saw an expansion to the high, breaking the resistance. So there are still those forgotten sell limit orders at support, that support area of the accumulation, okay? So they want to activate those limit orders and immediately knock them out by hitting their stop losses quickly, okay? And of course, major objection number 3 is to activate the forgotten pending stop orders, okay? And they want to show those breakout traders temporary profits in a false security as well, okay? So here it is. Let's see now when we get to the distribution phase, okay? So we see price goes up. They think, oh my God, it's going to break through. Here's what happens. Boom. And if you didn't trail your stop loss, look at what's going on, okay? So the retail herd may say, oh, it's all good. This is just a pullback, right? It's a pullback and it's going to keep going higher. But look what happens. Boom, shooting down. So now these people right here who jumped in, their trades are almost at break even. Most people at this point in time will chop out of the trade with a very small loss, or they'll move their trade to break even. And if their trade gets hit at break even, you still got to pay broker fees, right? So you still end up losing money if you didn't trade your stop loss and profit, okay? So now these guys are in trouble. They saw all of this profit go away if they didn't trail their stop losses, right? Let's keep it going. Okay, this is where they say, oh, okay, cool. It's turning back around for me. It's all good. Look what happens. Boom, meltdown. Okay, this is a trending market. Look, check it out. Lower high, lower low, lower high, lower low, right? High, low, lower high, lower low, lower high, lower low. Check it out. Here's what it is. Those stop losses just got hit. They are now out of the game. Money off the charts, right? If they were wise enough to just leave their stop loss there, right? If they lifted their stops, oh my God, bad news bears. So now, who are the market makers going after next? They want to activate these people here, right? These buy limit traders, they want to activate those guys and hit their stop losses quickly. And then last but not least, activate these folks here, the stop loss, the sell stop traders, right? And we want to get to their stop losses as well. So let's finish out the distribution phase. Let's play it out a little bit faster just so you see it. We got a little bit of retest there. We'll talk about that. Meltdown. It's coming under the average price line. Boom. Now check this out. Look at where we were. Their stop losses were here, right? Their stop losses were right here. And if we look, let's see where we are. Bang, got them. They are out of here. They are out of the game now. So now these buy limit traders, they're out and their stop losses got hit. Money off the charts. The only traders that are in profit right now are these guys, these sell stop traders, the break-in retest traders, right? But that now means there's still some money on the board for the market makers to get, and they want to get that money. Also, you got to think too, some smart trader probably made a decision to hop in on this trend right here and sell it down. So that's going to introduce us to the fourth and final phase, right? So maybe you were smart enough to start selling right here, right? Or maybe you started selling right here. We don't know. Most traders will see this and they won't hop in right here. They don't understand. They're afraid because most traders are taught 3 touches to a trend line. So most traders will start selling right here, or maybe they might start selling right here, okay? But at this point in time, you missed the most ideal entry, right? Now we're going to go to phase 4, which is the correction phase, okay? This is called, in my opinion, the reversal's reverse, the morale killer, right? Because if you were a trader that got beat in any of that rigmarole, right? If you were a limit order trader or a stop order trader, if you got beat, right? You're now afraid to reapproach the market. You're now afraid to trade the pair again. You're probably gun shy, right? So if you say, you know what, I was a little bit gun shy, but I decided I'm gonna go ahead, I'm gonna take the trade again. I'm gonna try again and get back in there. And now because it's on a downtrend, I'm gonna sell the market down. You don't know that phase 4 is coming up, which is the correction phase, right? Key characteristics, price will stall at a peak high or peak low formation. So you're going to see price stall at a peak low formation, and then it will move aggressively in the opposite direction of the pre-existing trend, right? That's the key characteristic of the correction phase. Major objective is to take profits again on the retail herd that entered trades on the correct side of the transaction, but entered too late. I tell all of my mentees, every single one of my students, that timing is everything. You can hop in on the right side of the trade, but if you hop in on the right side at the wrong time, all of a sudden now you're still losing money when you should have been profitable, right? So here is where you jump in the correct side of the transaction, but you enter too late. And they do this by exiting the trades once again on the opposite side of the trend that they created, right? Because again, in this case, they're in a downtrend, they're selling. So you're buying, right? So if you buy at a high price, they want you to sell back to them at a low price so that you lose money and they make profits. I'm telling you, the manipulation runs deep, okay? Objective number 2, of course, to hit the stop loss with the breakout traders. We know where those guys are. Hit their stop losses, right? That was activated during phase 3. And of course, to finish the pattern and make the market go back into phase 1 where the cycle starts all over again. So let's watch it play out. So again, these folks right here, these are the only ones in profit right now. Let's get rid of this line here because those traders got cooked, okay? Now, let's just say that this average price line, this is where the breakout traders had their stop losses, okay? So now, what do we got? They're in profit. Here we go. Price kind of stalls. And then, look what happens. Reverse, knock them out. It happens every single time. And then price goes back into accumulation. You'll see that prices kind of just bounces back and forth between a ceiling and a floor, right? Well, that's a major reverse right there. Look at that. So yeah, they definitely got those guys out of here. Think about this for a second, okay? If you entered into this trade right here selling, your stop loss was up here. You got beat. If you entered into this trade right here and you were selling, your stop loss got hit. You got beat, right? The only way you would have made any money is if you entered the trade here or here, right? And trailed your stop loss very, very deep in profit. But I'm telling you guys, this happens over and over and over and over and over again. It doesn't just happen on the small time frames, it happens on the large time frames too. And as you start to see the market maker pattern for yourself, you're like, yo, I know exactly what's going on. This is a ranging market. They're accumulating orders. They're trying to create an environment for me as a trader so that I can set ignorant orders. Look at that. Wow. Oh my God. Check this out. Look, if you entered in trades here or here, you got beat because your stop loss is up here. It's crazy how this thing works. It corrected all the way up to the top, right? So what you literally just witnessed were the market maker phases. This is my markup here. And you'll see here, I'm looking at a huge consolidation area, right? Ceiling, floor, ceiling, floor, ceiling, floor. I'm kind of watching it bounce back and forth, right? Now, as of this recording, I know that the United States dollar is about to go very bullish. So if the United States dollar is going to go very bullish, based off of pair correlation, when the dollar is strong, usually GU is going for a sell opportunity. So what you're about to see is what's called a whipsaw. That'll be in a different video, I promise, when I show you the variations to the pattern, right? But a whipsaw is when price breaks out of the accumulation. It makes the true move first and then reverses the true move, right? So once again, that thing of hopping in the right trade, but hopping in at the wrong time, makes the true move first, makes a false move against the true move, gets traders trapped up here, and then goes where it's supposed to go. That's my forecast for what's about to happen with GU as of today, which is June 15th, right? So here you saw a picture perfect, the market maker pattern play out, okay? So I want you to take what you just learned now, and I want you to try to find areas on the chart where you can box off the accumulation phase and start to see, okay, great, they accumulated here, they expanded here, maybe they even whipsawed, and then they made a peak high or peak low formation, and then they distributed. They took profits and then they corrected. Because once you see it happen over and over and over again, you realize it's a cycle. Now you can understand where you are in the phases and you can properly trade the condition of the market. That's something, once again, that I teach all of my students. I teach every single one of my students to come to the chart and say, what is the current condition of the market? Because see, some people will tell you not to trade this right here. They'll say, I don't trade this right here. But me, I say, what? This is an easy trading environment, okay? Because if this is my established floor area right here, okay? And again, it's an area, not necessarily just a not just a particular price, right? If I see that this is the ceiling and this is the floor, when price comes back to the floor, I'm thinking about my risk to reward ratio. I mean, at the end of the day, I can still be wrong. Excuse me, I can still be wrong, but it's about managing my risk, right? And having a reward in my favor. Looking at this right here, looking at this trading environment, it is an accumulating market. I'm not going to set a limit order here because that's just lazy. I'm going to wait for the market to show me its hand and give me an entry trigger. This right here is a picture perfect morning star at this established area of support. So me as a trader, when I see this, understanding where I am in the pattern, I'm taking this buy because I teach my students to buy the floors, sell the ceiling, right? I'm taking this buy. My stop loss is right here, 17 pips. I might give myself a little bit of swing room just in case they reach down. So let's say my stop loss is 20 pips, okay? But here's my reward. My reward is the high of the accumulation phase, right? Now here, I've got a 1 to 5.27 risk to reward trade. I'm putting 20 pips on the line, but I got a potential of 105 pips. Think about this for a second. I'm putting 20 pips on the line. If I'm trading with a standard lot, that's potentially $200 risk. But if I win this trade, I'm going to make $1,050 on this one trade. And that's what one standard lot, $1,050. Now, two standard lots, $2,100, right? Four standard lots, come on now, $4,200. And it might take this trade maybe 2 days to finish, right? But imagine being able to take one entry with one good lot size and being able to get this thing to pay you out $1,000 in 1 day, 2 days, max 3 days or 4 days. You know what I mean? Like there are some people that work for 2 whole weeks to make $1,000 after taxes. This is one trade, right? Let's play it out. Let's see what happens. Boom, look at that. You made your entry right here, okay? This candle opened up at 10 o'clock. Let's say you're on your charts late. Candle opened up at 10 o'clock. It closed at 11 o'clock p.m. So you say, okay, cool. I'm gonna take this trade. You take the entry and you go to sleep. You chill with your family. You know, you go play some PlayStation 5 or whatever the case is. But you go live your life because once you enter the trade, you accept the risk, right? But you make this entry here at 11 p.m. Eastern Standard Time on May 26th. But then on May 27th, literally the very next day, at 2 o'clock p.m. Eastern Standard Time, right? The very next day, while you're maybe on your lunch break, you get an alert when you're trading, you saying that your TP got hit for 105 pips and you just made $1,000, right? This is the importance of understanding the condition of your market and knowing exactly what to look for, but also understanding where you are in the phase, right? Because see, I see here, this is an established area of support and resistance, an established accumulation phase. I know how to trade this market, right? And that's just one way. I can teach you the other ways, teach you how to trade the expansion, teach you how to trade the distribution, even teach you how to trade the correction, right? But you have to be able to recognize the patterns. So hope you found this video extremely valuable. If you did, do me a favor, smash the like button, subscribe to this channel, leave a comment below. If you have any questions, ask me. I love to communicate with you. I want to talk to you. I want to make sure that you really clearly understand this. And of course, go back and finish enjoying this book. All right, and finish enjoying the book, Forex Trading Secrets, right? We are legal con artists. What we want to show you and prove to you is that we can teach you, regardless of your level of experience. If you are a Forex trader, we want to teach you how to legally rob the banks because that's where all the money is. Once again, hope you found value in this video, guys. Talk to you soon. It's yours truly, MJ Worthmore, and I'm signing off. Peace.